We had a client in yesterday, just as an example. The first thing he said when we were talking about planning, he was holding some assets that had created a huge tax liability for him. And the first thing he asked us was, I can't have any more of that. Taxes are killing me. And his broker had actually done him a disservice, and now he's in a situation that he's got huge capital gains, and he doesn't know how to step out of that, which we're going to be working with him on to go into a much more tax-efficient program for the future for him.
Yeah, it's really paramount that people recognize that there are three basic types of investment accounts. I mean, there's lots of different ways to invest your money, but there's three basic types of accounts. There's what we call and I call them buckets of money in my book.
Yep.
You have what's called the taxable bucket, then you have the tax-deferred bucket, then you have the tax-free bucket. The taxable bucket, I mean, that's an optional tax. I mean, people that choose to pay that tax do so, because they don't recognize that there's other places to put the money. I had a client that walked into my office, actually a couple, they lived through the Depression, and they shuffle into my office and they say, Dave, we got 9 CDs in 9 different banks for $100,000 each, and we think we may be paying too much in tax. Well, they are paying too much in tax because taxable, the taxable bucket, those are the types of investments where every year you get a 1099, every year you got to pay a tax. That's exactly where the IRS wants you to put your money, because that's where they make the most money. I mean, think about it this way. Roth IRAs, which are in the tax-free bucket, you can only put $6,500 per year in there if you're over age 50. So anytime the IRS is only letting me put $6,500 per year in there, I'm thinking that there's something pretty compelling about that bucket. You look at your 401k in the tax-deferred bucket, that you can only put $23,000 into that. That must be pretty compelling because there's a limit on how much we can put in. Then I look at the taxable bucket, and I'll tell you what, Margaret, if you won the Powerball lottery, you could put every last dime of your earnings or your winnings into the taxable bucket, because the IRS has no limit on how much you put into the taxable bucket. So that should give us a sense that there should be, if that's where the IRS makes the most money, then that's where we should have the least money. Really, the taxable bucket works well as an emergency fund because it's very liquid, it tends to be very safe, and we can get our hands on it when we need it to, when we need to kind of get access to it. But when we have way more than essentially 6 months worth of basic income needs in there, then we've got a huge tax